All right, welcome to the 10-minute trading room. This is how to trade in only 10 minutes a day and exactly how to take the guesswork out of trading. And with our 10 minutes to freedom trading strategies, you know it always starts with the market. And we have a few key performance indicators that we're looking at here. We need to see the 10 over the 20 with price over the 50 on the SPY. And we still have that. We have the 10 over the 20, but price is really giving it up the last couple days, right? We broke over this February 2nd high and then back down. However, if you're so inclined to look at drawing patterns, you could potentially say that maybe this is a cup with handle starting to form, maybe? I don't know. I am not a pattern person, but I could see somebody drawing that. So who knows where that's going to go. But we do know that this is not looking very bullish right now. We have the 10, we have price under the 10, price under the 20, and price almost to the 50 at one point today. So while this is still technically bullish, it is really weak right now. Yorn, hey, good to see you, man. Next, MMFI. This had been keeping us out of the market for a long time. And Yorn, if you remember, it broke over a couple days ago. It's like, all right, here we go, right? We got this breakover at this point. We got the market breadth breakover. And then Yorn, as you can see here, my friend, it has reversed, right? Now it's back to bearish territory at 44%. So this is bearish. And then Fin Club came in green, or I'm sorry, not green, came in red today. So what we see is slightly bullish, bearish, bearish. And when these don't align, that makes today a transition day. We're not in the market. We're waiting for valid market setups. Now, we do have some outlier positions on. And I got to tell you, I'm a bit conflicted with these. And I'll show you why. So I'm about break even on Capital One Finance. And as you can see, it went up and then came right back down. It's literally right at my break even point right now, maybe 20 cents above. So I could leave it. Next was Colgate Palmolive, or Colgate, yeah, Colgate Palmolive has been a fantastic short right here. This one I'm nearly double on my, it's up 83%. So this one's doing outstanding. This is the best one I have. UBS and Synchrony Financial. I'm not loving these. As you can see, my entry points were here, and then it's already under my half ATRs. And I don't love that. I don't love that, and I'm kind of sitting over here like. I'll tell you what I'm sitting over here like. If this were my trading plan, I would have gotten out. And so I'm still trying to balance how am I going to trade along with these, because these are meant to be longer term plays. So let's take a look at Synchrony Financial, right? First one here. This is using the outlier data. The outlier data came through here as a buy signal on May 23rd, around 30.67. I got in at 31.11. So, oh, you know what, Yorn, you asked me yesterday if these should be end of day signals, and I think maybe they should be. However, the buy signals do come at the beginning of the day. So I'm still trying to balance that out, right? Either way, I did buy it at 31.11. It's at 30.19 right now. So it's like 80 cents off. But what we see on here is looking at the past, looking how it does. It can absolutely, as you know, drift sideways before something happens. Where I'm going with that is if you're trading a plan, you need to have defined entry and exit signals. And here, my exit signal has not been hit yet. So I'm trading this knowing it's a little bit riskier than I like, but my exit signal has not been hit yet. Now, if the exit signal does come through on here, then of course I'm out. But if you look at some of these exit signals, these can be weeks long, right? July 13th to July 28th, October 11th to November 8th, January 23rd to February 2nd, April 6th to April 21st. So 2 to 3 weeks on Synchrony Financial. So I'm going to leave it. I don't love it, but this is part of the testing that I'm doing with this company here, is actually putting money in the market. And, you know, it's one thing to paper trade and look at historical results. It's another thing to actually sit through a trade and watch it go, right? So let's take a look at this. This is UBS. And this one, I got in at 2015. It's now at 1971. So what is that? 40 cents? That's not much of anything here. But same thing here. Like we're looking at January 9th to February 6th, April 3rd to April 19th, And then this buy point here was May 23rd. So give it a couple weeks or so, and it should be getting close to that that sell point there. So point is that by having a plan, I know what I'm going to do, even though I am uncomfortable on these. I am very honest with you. I am uncomfortable on these two. Capital One, it's basically a break even. My total trading account is up right now because of Colgate-Palmolive short. I'll take a look at that one for you real quick. And this one is just, it's working fantastically. Hitting that sell button there and watching it go down. So that's part of the plan, right? Sometimes you got to be uncomfortable, but the point is to let the trend work in your favor. And if you have an entry point, you need to have a defined exit point. So that's why I'm testing this, right? I need to put a little bit of skin in the game to make sure that I can feel comfortable as an ambassador for this program.